Hi everyone. This is almost a month and May 27th. Let's start on with 4 hours. I would say 1 hour is too low. 4 hours, and then we'll move on the higher end. We'll also look at monthly this time. It's month end, so it makes sense to see how it's doing on monthly time frame. Okay, on 4 hours, what do we see? So first of all, this was the potential threat, and then a bounce. Bounce was not so high enough, and then second touch. This was also a threat, um, but again got a bounce. So we can say it's defending and surviving at this move. Now it is still in this zone, which is still a support zone, and it has to stay outside somewhere around 28,500 for us to feel good about it. At this moment, I wouldn't say it's going down because it's defending very well, but it's like you don't want the water level to be at a chest level. You don't feel comfortable. It's not at your throat level, but definitely it's at chest level, which is not so comfortable. I would like to see the water level up to my knee levels, which is more manageable and not so risky. So at this moment, I would say this is still um, something that we have to watch out. And if it closes below this one or goes again, goes down below, I don't think the next time it will be able to support. Now, this is not this is not a rule, but just from experience that this kind of a behavior, if it dips again and tries to break this one, then I think it will look for lower support, because then whole entire structure will be weakened significantly. So if you look at the whole, I put this structure into this box for a reason, indicating that this is consolidation. And now the consolidation at a local level is happening near support. Now, there is no need to assume that because it's here, it is going to go down. As I always say, that it has to break below this level, especially this one, this spike. So then only it will look for lower support. So far so good, I would say. It's frustrating, it's boring because it is not doing anything for days and days. In fact, if we consider the whole entire consolidation, we can say it was here in month of March, so mid-March, so over 2 months. So we can say around 9 weeks, 9 to 10 weeks. There is no gain from a absolute difference point of view, price difference point of view. There is, like, it was here in mid-March and still it's there. So yeah, that's a little frustrating part. And another frustrating part, I would say, is because all the other coins are so much dependent on this, that any dip or any correction from BTC actually take down any other coin. So that's the only concern we have, which is for now. But let's see, it's not that bad. As I said, uh, we have to see it's moving up. So I would not change anything. I would not change anything. This is still good because it's holding up for now. Let's look at higher time frame on 12 hours. On 12 hours, mm, yeah, nothing different that we see, as far as setup is concerned. There's no difference, I would say. Yeah, maybe this has delayed, like, so we can keep this as so this box has to be extended in a way, but it's just a delay in terms of timeline. Hmm. What else do I see? Nothing much, to be honest, on 12 hours. Okay, let's go higher, little higher, one day. There's no new pattern as well. There is no new pattern. So definitely it has to sit near 28,500. That would be comfortable level, I think. Yeah, not on the lower side on one day. So one day looks on the edge, but still within the range. Uh, so that's not a threat for now. Yeah, let's look at weekly. Since there is not much change from the last week, I have nothing more to add because it hasn't done anything new. So I will look at weekly on Bitstamp. Again, the same. It's in green zone. So when it comes to weekly, we look at a higher time frame and a different point of view, where we don't care about specific support. We our supports are uh, different on a weekly because it has to be tracked differently at a trend level, because this is the recovery trend, and in that it started with consolidation, then a leg up, consolidation, correction, a leg up, consolidation, right? And then whole entire thing is consolidation. If it is really in bad mood, there can be one leg down, but still it's not the case at this moment, so I'm not assuming anything. No need to assume. So this could really follow the green level like this one. Worst case scenario, I would say, just in case scenario point of view, that even if it deeps like this and goes up, I'm okay. It's not a big deal. It's not a big deal as long as it stays above 23K, something like that. So in anyways, we would definitely not like to see the pink path. We would like to see the green path. This must be dashed because the probability is very low. So still we're looking for the green path. That has high probability. This has lower probability. But my point is, there's enough room for and for those who are tracking at trend level. I would say there is enough room before we call that it's really under pressure or or potential downtrend from here on. So this is not the level. Even this 23K is not the level. So we have room, we have some space. So there is no immediate concern, which is good. Okay, so that's at a trend level. There's one thing I would like to highlight. As I explained many times, that the trend level are subjectives to the time frame we choose. So if we look at one day, the one day trend, I would say, is down for now. One day trend is down. If you focus this particular, then it's down. Um, go one day. So for now, if we focus this one, this is definitely down, right? But when we look at this trend, this is up, and then we look at higher, then this is still down. So uh, this is local one day level we can track like this, that this has to improve and this has to go up. So the one day trend is down. Weekly trend, when we look at this one, the weekly trend, we can say this is still going up. Now, I mean, recovery point of view, this one. But from a monthly point of view, this is just a bounce, because this leg is the main leg. Monthly point of view. Let me hide drawings for a moment and show you. So the monthly point of view, this is a leg down, okay, and then this is a bounce. Now, if you look at this monthly candle, looks bad, okay. So the monthly candle, um, it's looking bad, but it's not something like somewhere coming down to 23K, as I mentioned on weekly time frame. That will be real concern. This is not desirable. As I said, this is more like water at chest level. Water at knee level would be 28,500. So that's something we would like to see. Now, yeah, so last month's opening was 28,476 on Bitstamp, which is roughly, let's say, 28,500. So we would like this price to go back to the last month's opening price, and that would give comfort level, right? So the water level has gone up. That means the pressure has gone up with this price correction, but it's manageable. Now, monthly point of view, this is just a bounce, remember, and we should not forget. And this is month end. That's why we are talking on about month end as well. So this is just a bounce, and the bounce is not high enough, as I have been saying this. But this is how the bounce turns into reversal. Okay, this is how it works. Sometime it comes down and do retest at a certain level and then go up. That's a potential scenario as well. And at this moment, that scenario is not developed, I would say. So let me show you with the line chart. Um, so in this case, it went down, then there was upside move, and this is COVID related move. But point is, it tried to retest this low. This is not a perfect low because it made lower low, and that was mainly because of COVID related pressure, right? Middle of the pandemic, and then went up and recovered. Okay, so I'm not saying it will follow the same. This low can be actually related with this one from a pattern point of view. So for now, the pattern, if we have to compare this drop and this bounce and this drop and then another leg up is the scenario we have in hand. Right now, I'm not thinking of retesting of this low because it hasn't gone deep enough for us to confirm that. When we think about scenarios, there are so many scenarios we could think of, and we can talk about that, but we cannot put weight on it. So this is the thing. I can talk about, let's say, 3 4 scenarios, but then I have to also tell you that which one has 60% weight, which one has 30% weight, which one has 10% weight, probability point of view. That's how it should be. If you rank from 0 to 100, then at this moment leg up has a higher probability, like more than 50%. We would like to see it continue, but if it starts breaking below 25K and especially 23K, then the scenario changes, the probability changes. Right now, we could say that this low can be comparable to this low, and this drop is comparable to this drop, and maybe then a leg up on the upside, right? But everything is conditional. Even this was very tricky. Those who remember this phase, this is where actually it could have gone down, to be honest. This was an edge case, very much on edge. This is like a very pivotal moment, where it hit the high of the prior high, just breakout, and then started dipping, and then this is like touch and go kind of a situation. Many people actually were extremely bearish at this moment. I still remember where we were not. We said this is definitely an edge case, but it's not threatening. And some people, used to draw a trend line, which is interesting. Nothing wrong about it. So they used to draw a trend line like this and say, look at that, it's broken. It's broken. And yeah, it's broken, but then you have to see how deep it goes. Similarly, you can draw a trend line from here, and then you can say it's broken. Yeah, it's broken, but then you have to do the same. Even in, let's say, line chart is one thing. Let's say in candle on a weekly. So if you draw a trend line from weekly, my chart has more clarity. Sure. So if you draw this kind of, then this is broken. You see, if you connect this one with this one, and then this is broken. Yeah, it is broken, but it's the trend line is just very high level, very rudimentary measure. Okay, I'm not saying it's not important, it's important, but then you have to do more as a TA. You have to calculate how deep the move is, and then decide. If you just learn the trend line, and based on trend line, if you're saying this has broken down and now going down, then probably you could be proven wrong very well. Like it happened in past, I was showing you. Let me show it again. So when you draw something like this, and then draw like this, many people actually called out this as breakdown, and they were actually forecasting for 3K, and not just 3K, they were talking about new low. So that's how. And similarly, I see on social media, people are so bearish, and they are still talking about new low and so on. Now we cannot change their view, but I would simply say that there such see, anything can possible, because price could go down. I mean, it's not that we know the future, but the the point is that there has to be some probability. It's a probability based analysis, and it's not about black and white picture, right? It's not about up or down. There's always a transition. So if it is heading down for last let's say 8 weeks, then you have to see how deep it is going, and one has to assess accordingly. So let's say in trend, some uses some different methods, and a trend line based method gave the breakdown, or indicated breakdown, which was totally wrong. Retrospectively we can see that, right? And sometimes you it is correct, like this one. You see, when you connect this one, and then there was an attempt, and there was a real breakdown as well. So now so it's confusing, and it is, that's why not many TA are able to assess the direction consistently. Yeah, the thing is, it's not about being right all the time. I would say it is about being right in important occasions, right? You cannot be wrong at a trend level. It's okay that if someone says the support is 25, so let's say support is 28K, and there could be a bounce for there. It misses 28K and probably bounce from 27K or something, 26, which is totally fine. That's not a problem. I think the problem is when one sticks to a direction without changing the mind and or stand, and then stick to that wrong direction. That's where the damage comes, because yeah, if you're wrong, probably you face some damage, right? Loss, but not really if you understand that what is the now new direction. So it is not about being right all the times, but it's about um, consistency, and open enough to understand that I'm wrong, and then okay, let me reset my thought process, let me reset my bias, or my stand, and then see what is really happening. The one has to do that when someone is wrong. So in this example, with the trend line, that this is the case where it broke down, this is the case where it broke down, but not from a trend point of view, right? And then it resumed. So similarly, if you look at this one, and if you draw a line, then you say, oh, it's broken down, yes. And I would say this is not the level where one can call out breakdown. Okay, so one can definitely call out one that this is weakness. As I said, the water level is not at at a knee level where we feel comfortable being in the ocean, let's say, or seashore. It is more at the chest level, so that is really but it is not somewhere at our throat level where the things could really go ugly, right? So we are not sinking at this moment. We are not drowning at this moment. Okay, that's how I would express. So I thought maybe I'll sometimes some examples from the past are very useful, and looking at weekly and monthly. This call is so important because what happens during the week, there's so many events, there's so much price action, but then you have to sometimes zoom out, you know, and look at weekly level, like what we do here on weekly call, and see what is really happening. And sometimes you have to, let's say, hide all the drawings and look at the line chart like this one, and then focus on the local region, focus on this region, then focus on this region, and of course you can focus on overall region like this, and then assess what is really happening like that. I'm not expecting you to find out, but that's what I'm doing on this call, right? So we focus on this local month end like this, we focus on monthly trend on all also, so you get big picture as well. So let's go back on 1 month again. So 1 month, I would say it is something that we have to be watch out for sure, but I will call out when there is, and 25K is the level where below that I would call out something, that something is wrong, right? But be with me, that level might change little bit based on the situation, but we won't be on a wrong side, that's for sure. Now, there are a couple of things that are happening now. Moving away from TA, fundamentally, there are. I mentioned last week as well. The inflation is sticky. Inflation is not going down. That's why DXY is pumping. I mean, recovering. I'm trying to recover, I would say. We'll look at DXY as well. And some statements came from Fed official that there's one more hike coming up. There are some official who are saying two more hikes are coming up. So we don't know, but at least one hike is coming up. Now, if the price is already in for 25 basis point, then probably okay. The market always anticipates pause and stop. So maybe they may take one more hike, and probably they are expecting that they'll stop and so on. But if there are, if Fed remains hawkish and remains if they don't give any indication of potential pause, which I don't think they will give because there is no positive sign from inflation. So they would remain hawkish in that way, in their stand, and that's something continue to put pressure. Now, on other end, the stock market actually is rallying. Don't ask me why, because to me this is enthusiasm from AI and some tech stock. I think now how long this kind of rally is not fundamentally driven rally, to be honest. Only thing is on stock market in a broader sense, I would say, because the pressure on earning is still high. It's not that the job market is still hot, so the economy is not really weakening. So I think the market is still banking that the economy has not showing sign. I'm talking about the US economy. So the US economy has not showing any major decline in terms of job market. So they think even after so much of rate hike, um, it's able to absorb all the shocks. So that's, I think market is banking, and on top of it, some tech stock did really well. Right. So I think so it's a mixed opinion, mixed baggage. So in stock market, I would say it's not about the all the stocks are going up. but only selected stock in selected sectors. I'll give you an example. For an example, when we had COVID, then the health related stocks went up. So specific sector had opportunity. When the war broke out and also the COVID was at peak, then the oil price went up and the energy price in general went up, and that sector uh, was profitable. Okay, and then energy sector went down. Of course, while these two sectors were going up, the tech sector was beaten up badly, right? So you see what happened prior to COVID, everything was up, like all the sectors were up. When the COVID hit, the fundamental change, and then the fundamental specific to the situation gave boost to that sector and stocks, right? And so I'm just throwing some examples here. And now when the buzzword is AI, and some stocks are doing well, also the investment is coming in the chip market, and basically integrated circuits market, so microprocessors and all. Um, so investment is coming back in the US, so that sector is getting boost. And yeah, and of course some top tech giants like Microsoft and um, um, Microsoft again because of AI, and Apple, and they are really pushing the price or index high. So sometimes the index is, you have to be careful that you have to study the index carefully, because in index, if you look at the weightages, let's say Nasdaq has 100 stocks, but if Apple weighing, let's say 7-8%, right? Which is the reality. I haven't seen the latest number, but it was significant. Then imagine it's like a billionaire in a group. You cannot say, so let's say there's a group of five and there is one billionaire in the group. And then you say, what is the average income of this group? And of course, it will be in some millions or maybe even billion. Even though one or two individual would be in few thousand. So think about, so what happens, the data skew, that skews the data, and that is not appropriate measure averaging out. So what you have to do, you have to remove that billionaire from the group and then find out what is the real average. Similarly, this is what is happening in the index. The stock index is going up, and that's to me is illusion, because the heavyweights like Microsoft, Nvidia, and Apple and couple of others actually have higher weightage. In fact, top 5 6 even stocks are weighing 50%. You can look at it, it's easily available information, you can check it. What I'm trying to say is, similar to stock market, I'm coming back to crypto, that there are so many coins, but only few coins are actually making progress, and we have to focus on those and see where the opportunity is. I don't think the whole entire crypto is actually recovering. Okay, so if I talk more about crypto, I purposefully talked about stocks because I wanted to talk about that the situation, the current last 2 years, the situation is where one has to be smart enough to move their money from health sector, uh, like what happened in health sector, or let's say home related product during the COVID, right? Remote home, that kind of um, products were booming, and then energy sector were boom, now tech sector. So what point is, one has to be smart enough to move the money in the stock market, right? Now similarly in crypto, it's not that because BTC has gone up from December, January, everything went up. No, not really. In fact, I saw some crypto coin, and like sushi was surprising. Sushi saw, which was like about to make new low. Not kidding. In fact, it made new low. Maybe I can quickly check. And I was surprised because I'm not saying it was great coin or it is. I was just randomly looking at sushi, and I was surprised that it made new low. Look at that. And it's not just about sushi, but so many coins, altcoin, are actually near December low or below December low, and there is no rally at all. So this is extreme example. Then we have another example, which I'll talk about when we go through altcoin. But this is just to give a quick example that when we talk about the rally or recovery, it is actually happening only with some coins, not all the coins. So uh, I don't want to say they will have their turn and all. We'll see when their turn starts. My only message is that, coming back to BTC, that this is amazing bounce, but this bounce is not enough where we can say that the trend has reversed. And the same time, I'm not trying to confuse you. Same time is this is not threat. So one thing I'm saying, this is recovery like this one. Okay, what we want, but when this thing starts, right, then like this one, then we can say this is in a this is going for new all-time high, or on reversing, like it is somewhere here, and then we would like this to happen where it will knock out this high and go up and make new high. But at this stage we are at a monthly, I think we are kind of neutral in a way, that okay, the recovery is positive and then we would like to see this kind of surge. Similarly, this is positive, but then we would like to see surge on the upside, right? So we are not saying we are bearish or bullish, we are saying that so far so good, and we know the boundary that below this is below certain level we have risk, and then below certain level, sorry, above certain level, we would see something like this. So this is a zone where we keep an eye on what is really happening. There's so many factors that are driving this one. As I mentioned, the Fed's policy is one of the key. Debt ceiling, I don't think it's a big deal to me. It's just a political drama, as I've been saying. They would discuss until the very last date or last moment, and ultimately they'll raise the ceiling. I have absolutely no issue, but what they'll do, they'll negotiate. It's like a blackmailing. This process is a blackmailing process for the opposition. I mean, I would not say which is right or wrong, but then opposition gets chance to negotiate on something. Let's say they are not ready to allocate $80 billion for IRS, just an example. So a Republican would say that 80 billion should not be given to IRS. So they'll negotiate. And if you agree, this is just one example. There could be many which I am not aware. And internally, what is happening, we don't know everything. But this is, let's say, one example which was in the news. So if they say, okay, if you forget about this $80 billion to IRS, then we'll agree to the debt ceiling and so on. Or they may say, okay, not this much, but that much, that kind of negotiation. So ultimately, I'm not worried as market is reacting, I think, or people talking about debt ceiling or failure and all that. I don't think, personally speaking, because it never happened. Because if it happens, then the government officials won't get job, and then the government system goes down, and if the government system goes down, then the country goes down. So I mean, logically speaking, there will be some negotiation, but they'll approve it ultimately. It's just a drama, as I said. Anyway, so that's my thought on debt ceiling. Inflation, as I touched base, that I think 25 basis point is still on the table, a high probability. But then what will be their tone? I think that's what market will look for it. So if that tone remains unclear, then or hawkish, then probably, yeah, so then market would reflect that tone in terms of price action. And that's something we'll see. We don't need to speculate. We'll just go with the flow at this moment, right? So that's the best way to navigate. So these are my thoughts on I shared my thoughts on stock market for a reason, that when someone sees index rallying, don't think that whole entire market is rallying. Only few sectors and few stocks are actually rallying, and especially when the tech stock, high cap tech stocks rally, then they really push the index higher. Because as I gave an example, if the group has one billionaire, and if you average out, the group valuation would go up, but not because of the rest of the four members, but one guy in the group which is billionaire. So that kind of, so index is actually skewed in a way. And totally, I actually tweeted, but I'm a small guy, I, given a choice, I think you should refer index which is equally weighted. There are some indexes which are equally weighted, means if there are 100 stocks, then each stock will have 1% weightage, which is, I think that makes sense. Equally weighted index should be looked at, because that makes sense. So that's my view on why stock index is going up. Okay. And of course, that few tech stocks are rallying, and that's the reason. Okay. So that's my view on stock market and index. And of course, the index is diverging for that reason as well. Coming back to crypto, we'll talk about altcoin, and that's where I'll give my insight on what I feel about altcoin. And so in the next session, right? So from Bitcoin point of view, what or Bitcoin related uh, data point, we'll go through DXY now, as we do. So if I'll keep the drawings hidden and look at the line chart on a weekly time frame. So definitely this move is what BTC is not liking, and this move is still strong. Week has ended. This is weekend. We'll have to see how the new week opens. And this high, it should not close above this high, right? Which is like, this is closing price. This is not high, by the way, because this line chart always depict the closing price. Remember, this is not candle view. This is line view. Remember, so this is not the high, but the closing price. Okay, highest closing price in recent time. So which is 105.2, let's say 255, which is, let's say, 105.3 approximately, right? So to be precise, yeah, that much. 105.3, let's say. So price, we don't want to close, or we don't want to see this DXY closing at that level. That will be very bad for not just crypto, but also tech stock, in my opinion. Not now, but later on. I'm not saying, um, I'm not saying that um, they'll be crashed, because, but definitely they will come under pressure. Um, at this moment, it's too early to call out, to be honest. But because there is inverse relationship in most of the cases, why I'm saying most of the cases, because there are some phases where DXY and Bitcoin go in the move in the same direction. Yesterday I was on call, and I shown on to one of the users that, see, in this phase DXY also went up and BTC also went up. Maybe I can quickly show it to you. Okay, so look at this phase. Look at this phase. DXY was still making progress, and BTC also made this progress. And this is not for one day, for many weeks, many weeks. This is weekly time frame, remember, many weeks. You see, we would have. So let me sync up the. So definitely this phase where, look at this one, okay? Then look at this one. This is recent. So DXY started moving up. Look at the DXY at the bottom and BTC on the top. Look at this one, right? For so many weeks, and they went in the same, went up in same direction from a trend point of view, right? Not each and every day point. You cannot compare that way. So these are the two occasions, and you will find so many other occasions as well where they went up in the same direction. Look at this big move on in 2016 all the way here. So they also went up. So we do look at DXY for sure, but DXY is not the ultimate guide. Okay, we refer it. That's why I call a reference data. Somebody, if somebody is trying to assess DXY and trying to take trade on BTC, be careful. I would say, be careful. Okay, it's I mean, it's like not all clouds end up with rain. So when it is cloudy, don't assume that it's going to rain. They may pass. So just an example. So if someone, yes, the probability of rain is high if there is dark clouds, but not necessarily they would rain. So you need more data, more other things that before you conclude that. Otherwise, it's so easy. You see black cloud and you say, "Oh, it's rain." So you don't need fancy forecasting, right? So it's similarly when you look at DXY, and if you're trying to assess BTC looking at DXY, it's similar to looking at the cloud and forecasting rain. So yes, there is some probability, but you cannot be accurate all around. So that's how it is. It's a game of probability, and you need to be accurate and then see what all makes sense, not just one thing. So DXY, as I mentioned, is having nice move, which is not so nice for BTC. Okay, that's how it is. But now this bounce hasn't gone up enough, as I mentioned, which is threat. But definitely we had to keep an eye. Okay, we had to keep an eye. In fact, look at this trend line. A little trend line. If I draw this trend line, is still in this range. So yeah, but yes, this is going up simply because the dollar is expected to be stronger. And why? Because the Fed is not giving up. That's why. The yields, the bond yields are also recovering. As you see, last 2 weeks they were like this. This is a support zone. First touch, second touch, and three, four touches, major touches, and they're like triple bottom kind of. This is 1 second, and this is like two in one kind of. So so much of so in other words, it's not giving up, and at the same time it's below this rejection point, similar to DXY. So this is a, you can say, if you put together DXY bond yields on a weekly time frame and BTC, what you are saying is this is bouncing but not high enough. That means it's not a major threat at this moment. Similarly, BTC is dipping but not deep enough. I hope it makes sense. So both of them are going in opposite direction in recent time, but both of them haven't crossed a level where we can say they are likely to continue in that direction. This is not the week. We'll see. If next week is like that, we'll see. We'll figure it out. But there is no need to assume that this is how it is going to be. I hope this gives you clarity, right? And sometimes, as I said, not sometimes, but often one has to refer weekly to get clarity, I would say. So at this moment, if I have to summarize, I would say we have to keep an eye on key levels. Trend level recovery has no immediate threat, but we have to continue focusing on what is really happening. I'll talk about alts. in the next session. So I would close this one where we covered BTC in detail. We all looked at a lower level, higher level. I also explained trend line. Sometimes it's misleading. I explain stock market sectors, index, why they're skewed, why they're rallying, and it could be short-term thing. The broader spectrum is still weak, and so on. Then we covered DXY and bond yields, technically speaking, and Fed's position, potential decision, which I'm hearing from the different market experts. So I shared that as well. So I hope we covered all the required areas, right, which is needed for us to assess the trend. So the focus is trend. Okay, so see you next week. I'll end this session here. Bye for now.